And a very good morning, everyone. Welcome back to KleverStock. My name is Wan Izul Islam, and today we'll be bringing you the morning bell updates on this lovely Friday morning. Thank God it's Friday, and we've got a long weekend up next. 4-day weekend, just remember that. 15th is a public holiday, with 16th being Malaysia Day. So, back to the news. Let's kick it off with stock market updates for today. FBM KLCI started the day on a steady note, taking positive cues from Wall Street's record-breaking performance overnight. We heard what happened yesterday, Charlie Kirk being assassinated in Utah University. That has definitely affected markets, but lacking fresh domestic catalysts to sustain strong momentum in the FBM KLCI. Now, the benchmark index opened marginally higher by 5.19 points at 1,588.04. By 9:17 a.m. this morning, the FBM KLCI was trading at a total of 1,585.57, and that's a gain of 2.72 points or 0.17%. Now, this comes as US markets closed at fresh record highs, with the S&P 500 rising 0.85% to 6,587.47 points. The Nasdaq gaining 0.72% to 22,043.08 points, and the Dow Jones advancing 1.36% to 46,108 points. Now, the rally was fueled by positive economic data and increased optimism for potential Federal Reserve rate cut at the next meeting. Now, despite the positive external cues, local research houses offered a cautious outlook. Bajaya Research, City and Berhad, they noted that the recent recovery appears to have lost momentum, with the key index likely entering a consolidation phase. The firm stated that given the absence of strong domestic catalysts, investors should brace for a period of sideways consolidation and adopt a more selective approach. Bajaya also added that even with sticky US inflation data, expectations of an imminent Fed rate cut may cushion any downside risks. The research house also identified resistance at the 1,600 psychological level, with the support at 1,570. Rakuten Trade echoed this sentiment, expecting the index to hover between the 1,575 to 1,585 range today, given that it is the final trading day of the week ahead of an extended holiday weekend. Now, among the early price movers, notable gainers included Nestle. They were up by 78 cents to 96 ringgit 28 cents. FNN, they climbed 34 cents to 27 ringgit 34 cents. Malaysian Pacific Industries, or MPI, they added 28 cents to 28 ringgit 50 cents. And Heineken, which advanced by 16 cents to 20 ringgit and 50 cents. On the other hand, decliners were led by Dutch Lady, which slid by 26 cents to 27 ringgit 14 cents. Eurospan, they fell by 18 cents to 2 ringgit 50 cents. Paragon Union, they lost 12 cents to 2 ringgit 80 cents. And Hong Leong Industries, they gave up 6 cents to 13 ringgit 72 cents. Moving on, we've got some updates on our local currency. The Malaysian ringgit opened higher against the US dollar on Friday, extending yesterday's gains. Now, as the greenback retreated following the weaker US jobs data. Now, this has heightened expectations for interest rate cuts by the Federal Reserve. Now, local time 8 a.m. this morning, the local unit was firmer at 4.2065 or 4.2225 per dollar, compared to Thursday's close of 4.2185 or 4.2240. Now, Dr. Muhammad Abzanizam Abdul Rashid, Chief Economist at Bank Muamalat Malaysia Berhad, he stated that the latest US economic data has cleared the path for a potential Federal Reserve rate cut at its next meeting next week. While the US August Consumer Price Index, or the CPI, of 2.9% was in line with market forecasts, the number of initial jobless claims unexpectedly rose to 263,000 last week, significantly exceeding the market expectations of 235,000. Now, this is seen as a key sign of a weakening labour market in the US. Muhammad Afzanizam also noted that a closer look at the second quarter of US gross domestic product or GDP growth, which was revised upward to 3.3% from 3%, revealed that the growth was largely driven by a sharp decline in imports, which plunged by 29.8%. This meant that net exports provided a significant boost to the overall GDP, a dynamic that is often seen as a sign of underlying domestic demand weakness rather than strength. Now, the US Personal Consumption Expenditure, or the PCE Price Index, the Fed's preferred gauge of inflation, is scheduled to be released later today and will be closely watched by the market. The ringgit, however, traded lower against a basket of other major currencies. It eased to 2.8569 or 2.8680 against the Japanese yen. It also weakened to 5.7095 or 5.7312 against the British pound, and it slipped against the euro to 4.9351 or 4.9538. Against other ASEAN currencies, the local note was mostly firmer. Our ringgit strengthened against the Indonesian rupiah to 255.5 or 256.6. It also inched up versus the Singapore dollar to 3.2817 or 3.2945. Our local currency also improved against the Philippine peso to 7.35 or 7.39. But however, it did fall against the Thai baht to 13.2576 or 13.3156. Now we're going to be continuing on with some local economic news. This is going to be talking about Budget 2026, which is coming up in October. With domestic economic growth moderating and global uncertainties mounting, Budget 2026 is expected to prioritize resilience, sustainability, and inclusivity, laying a critical foundation for the goals outlined in the 13th Malaysia Plan, also known as the 13MP. Now, the budget, which is going to be tabled on October 10th, is anticipated to focus on sustaining domestic demand, fostering employment, and supporting private sector investments. More to come later. Now, this budget arrives at a pivotal time as Malaysia's economy grew at a slower pace of 4.4% in the first half of 2025 compared to 5.2% in the second half of 2024. Now, the government, they project a real GDP growth of 4% to 5% for next year. It's a slight increase from the 4% to 4.8% estimated for this year. This is set against a backdrop of global uncertainty, and that's driven, of course, by US tariff threats as well as geopolitical tensions. Now, the government is also facing pressure from rising costs across various sectors, that is including higher labor costs, energy prices, and also raw material prices. Businesses are also grappling with increased compliance costs from new policies like e-invoicing and also expanded SST, which is also the Sales and Services Tax. So, to address these challenges, Budget 2026 is expected to avoid new taxes, so no new taxes in Budget 2026. That's on households as well as businesses, but instead it will focus on targeted measures to alleviate financial burdens and stimulate growth. The budget is expected to focus on a number of key areas. We'll go into a little bit of detail with some of these areas. Fiscal consolidation. Now, the government is anticipated to target a fiscal deficit of between 3.3 and 3.5% of GDP for next year. That is a reduction from the estimated 3.8% for 2025. In line, of course, with the 13 MP's goal of achieving a deficit below 3% by 2030. Now, gross development expenditure is expected to also increase by 3.5% to 88 billion ringgit, a lucky number there. Now, up next, we've also got household and social welfare. Allocations for cash assistance programs like the Sumbangan Tunai Rahmah, STR, as well as the Sumbangan Asas Rahmah, SARA, are projected to increase to 15.5 billion ringgit. And that's going to be benefiting at least 8.8 million recipients, up from 13 billion ringgit in budget 2025. Now, civil servants as well as retirees will also be in focus for the next budget. A 7% salary adjustment for civil servants in the second phase of the revised public service remuneration system is expected to cost 5 billion ringgit. Now, this will be complemented by financial assistance payments of 500 ringgit for civil servants in grade 56 and below, as well as 250 ringgit for pensioners. Now, businesses like SME support will also be focused by the budget. The budget is likely to provide increased support for small and medium enterprises, which constitutes about 98.4% of total business establishments. Now, this includes new grants and loans for innovation, export capacity, as well as green technology adoption. One proposed measure is to provide up to 50% of grant support for pre-approved generative AI solutions to help SMEs adopt new technology. And another focus will be on high growth, high value sectors, also known as HGHV. Now, the budget is expected to double down on attracting investments in these HGHV sectors, such as semiconductors, advanced manufacturing, and also renewable energy. The government may enhance existing tax incentives, such as the reinvestment allowance and investment tax allowance, to encourage sustained investment in these sectors. So, other focuses that we won't be going into detail now, which include human capital development, healthcare, and also green economy, will be focused in the next budget. We're hoping that this next budget will definitely be a good budget for not only us Malaysians, but also foreign investors to come seek investment in our country. Now, to make Malaysia's tax and regulatory systems more business friendly, like I was mentioning, a new investment incentive framework is being considered to streamline approvals and also reduce the red tape. There's also a proposal to lower the corporate tax rate to a more competitive 22% from the current 24%. These are definitely some of the initiatives that will attract foreign investors. Now, the budget will also address labour market dynamics. The 13 MP outlined plans for a multi-tiered levy mechanism, or MTLM, for foreign workers, as well as long-term goal of reducing the foreign worker ratio from 14.1% to 10% by 2030 and by 5% in 2035, which is in about another decade. So, SMEs have proposed a 2-year moratorium on this levy to ease their financial burdens. Finally, the government is set to review the mandatory retirement age of 60 years old in response to an aging population and introduce changes to the Employees Provident Fund, or EPF, and that will help provide monthly payouts to retirees. Some of the highlights that we look forward to in our upcoming budget 2026. That's going to be tabled on October 10th, 2 days before my birthday. All right, so we're going to be moving on to some market insights. These are some of the stocks to watch out for today. DNO Green Technologies Berhad, they could be rising out of its sideways channel as the momentum indicators can be seen pacing higher. Now, ever since a sharp rally in August, the share has been moving in range-bound trading with little inspiration to move beyond the 200-day simple moving average and attack a May 2025 high of 1 ringgit 60 cents. However, this could change as the slow stochastic bounce off the oversold line to resume an upward trajectory, while the 14-day relative strength index, or the RSI, rises to a strong 69 points. Now, the daily moving average convergence, also the divergence or the MACD histogram, they're sustaining a positive momentum for DNO. Up next, okay, we've got KPJ Healthcare. KPJ Healthcare Berhad, they're making a sharp recovery after ending a correction phase earlier this month. So you got to be watch out for this. The share extended a strong rebound yesterday and looks poised to further retrace losses amid an uptick in the momentum indices. Now the slow stochastic has hit about 51 points, while the RSI also continued to pace higher at 40 points. Now the MACD of course remains submerged in negative territory, but can be seen making a U-turn towards a more bullish conditions. So the share could target a resistance of about 2 ringgit 70 cents and 2 ringgit 90 cents, while the support is pegged at 2 ringgit 37 cents and 2 ringgit 20 cents. The MACD remains submerged in negative territory but can be seen making a U-turn towards a more bullish condition. I mentioned that already, so just watch out for that, okay? All right. Up next, we've got Front Kent Corporation Berhad. Their ascending trend that could be alive and well despite a recent bout of sideways trading. Now the share is awaiting a boost of momentum to rise above the recent high of 4 ringgit 44 cents to continue its recovery towards a December 2024 peak of about 4 ringgit 59 cents. Now looking at the technical indices, the slow stochastic is bullish at around 81 points, while the RSI sits at 58 points. The MACD histogram, however, remains slightly negative, and the support will be resting at around 390 or 3 ringgit 51 cents. Finally, we're going to be wrapping it up with more corporate developments and deals across Malaysia. Here are the headlines for today. Gamuda Berhad's unit in a joint venture with Evia MSC Limited and as well as H108 Limited has submitted the highest bid of around 1.01 billion Singapore dollars. That's amounting to over about 3.3 billion ringgit for leasehold land in Chencharu Close, Singapore. Now, the 29,450.3 square meter site is designated for a mixed commercial and residential development. This follows another Malaysian JV, Sunway, and its partner, winning a residential site in Chuan Grove with a bid of 623.91 million Singapore dollars. Some big property moves in the market happening right now. Up next, we've got our headline at number 2, Jasa Kita Berhad. They received a notice of an unconditional mandatory takeover offer from Kintan Prima Sdn Berhad, on whose behalf Maybank Investment Bank Berhad and Astramina Advisory Sdn Berhad are acting. Now, the offer was triggered after a group led by oil and gas veteran Abdul Aziz Mohammed acquired a 40.33% stake in Jasa Kita for about 68.9 million ringgit, which is around 38 cents per share. And that was acquired from Tan Sri Tan Hua Chun and Datuk Sri Tan Han Chuan. Following this acquisition, Abdul Aziz and his group now collectively hold a 50.19% stake in the company. A mandatory takeover offer is a legal requirement in Malaysia when an entity acquires or gains control of more than 33% of a company's voting shares. Our next news update or headline to watch out for today. My News Holding Berhad reported a net profit of 6.43 million ringgit for its third quarter ended July 31st, 2025, which is more than double the 2.64 million ringgit from a year ago. Now, earnings per share rose by about 86 cents from 35 cents. Revenue grew by 11.3% year-on-year to 230.94 million ringgit, a performance driven by stronger in-store sales as well as addition of 53 new outlets, bringing the total now to 679 outlets in Malaysia. Well done, my news, for such a very good financial report for the third quarter of your financial or fiscal year. Up next, at number 4, the headline reads, Unique Fire Holdings Berhad. They're acquiring a parcel of vacant industrial land in Klang, Selangor, for approximately 15.5 million ringgit, and that's to support its future business expansion. Now, the 4,926 square meter tract of freehold land is strategically located in the Kota Kemuning industrial area. It's very close proximity to the group's existing manufacturing facilities. This is expected to enhance operational efficiency and facilitate better coordination of resources upon its future development. Last but not least, Burma's Auto Berhad, or also known as B Auto, their net profit for its first quarter ended July 31st, 2025, fell sharply to 8.28 million ringgit, and that was from 70.22 million ringgit a year ago. That is a huge slump. Revenue also dropped to 491.28 million ringgit, and that was from 846.18 million ringgit in the previous year's comparative quarter. Now, the decline is said to be due to largely attributed to intense competition and also weaker sales in the automotive market. That is a huge decline. Hopefully, B Auto will bounce back in the future. That is a wrap up for the Morning Bell updates with me, Wanizal Islam. Thank you so much for watching us, investors, and stay tuned for the rest of today's programming. And we'll see you guys soon. Have a lovely Friday ahead and enjoy the weekend.